Hello, welcome to Chapter 9 on liabilities, especially current liabilities and payroll. Welcome to comprehensive problem for Chapter 9, and this week I'm focusing on instruction in the cash flow statement. So as you look at the statement behind us, behind me, you have this Chapter 9 comprehensive problem. You know how to do journal entries, so here are all the journal entries. You know how to do the calculations for cost of goods sold, change in inventory, ending inventory, those miscellaneous items. Now, there are many new journal entries with all these liabilities that you're learning in Chapter 9. So I have highlighted those in a soft blue so you could see the new journal entries and be sure that you know how to do them. You know what the accounts are and how they're changing and how these calculations came about. Did you see the calculations here at the foot of the page so that you know how to do those? Here again, another new journal entry for payroll and a calculation here for payroll, and these other calculations that we're carrying forward from past weeks, and now some new adjusting entries that came in with this new chapter, and then the calculations on those adjusting entries that are here. Those are all highlighted in blue for you so that your eye will see them. Now here are all the T accounts, and of course there's a lot of posting to do with this many journal entries. And when we look at comprehensive problem 9, you have this trial balance that is exactly the ending trial balance from last week with 2018, and it's the starting balance for 2019. And so we have these beginning balances. So if I looked here, here's my beginning balance in cash, here's my assets, and here's my assets, here's cash, here's my beginning balance, and my beginning balance is 93,380, and it's 93,380 there in the cash account. And then transactions 1, 2, 4, 8, 12, 19 that are all on the credit side, and 9, 13, and 14 that are on the debit side. And then for all of these T accounts, I add up the debits and get a number. I add up the credits and get a number. Whichever one is larger, I subtract the smaller number from the larger number, and that's the balance that's in the account. The normal balance of assets are all debits because those accounts increase with debits, and we would expect to have more increases than decreases. So here are the changes that happened in the assets, and here's cash, and there's petty cash, and accounts receivable, and accounts receivable credit cards, and allowance for doubtful accounts. And it's a contra asset, remember, so it carries a contrary balance, a credit balance. It's used to reduce the book value of accounts receivable. Here's supplies, prepaid rent, merchandise inventory, equipment, van, and accumulated depreciation. So we have all of those asset accounts. Now here are the liability accounts. They're new with this particular chapter, and here's the liabilities. Here's accounts payable. You knew that one before. It did not have a beginning balance. There was only salaries payable for a payable coming forward last week. So no beginning balance in accounts payable, and they were all paid off. So they have a zero balance, but it's on the credit side because the liabilities increase with credit, so the normal balance is a credit. Here's salaries payable. It did have a beginning balance, and they were paid off, so the balance went to zero. Now here is sales tax payable with its transactions, federal income tax payable, FICA Social Security tax payable, Medicare tax payable, warranty payable, unemployment tax payable, interest payable, and note payable. So we have all these liabilities now with this new Chapter 9 and this idea of current obligations that have to be paid. Then we have the stockholders' equity. So the stockholders' equity is common stock and retained earnings. Dividends is the contra account to retained earnings that's used to distribute dividends out to our stockholders. And then the sales, the revenues, and the expenses are listed in the income statement, and we'll get net income from them, and we'll transfer net income into retained earnings in the closing process at the end of the accounting cycle. So here's the alarm sales when they sold alarms, and here's the monitoring service revenue that they had. So that's their two forms of revenue. Their cost of goods sold for the merchandise that they've sold, and then these are in alphabetical order. So you've got advertising expense, credit card expense, depreciation expense, maintenance expense, stockholders equity, miscellaneous expense, payroll tax expense, office supplies expense, rent expense, salaries expense, supplies expense, uncollectible account expense, utilities expense, warranty expense, cash over and short, and interest expense. So these would all have debit balance, all these expenses, and at this point they're open. We haven't made up our financial statements yet. We have written our adjusting entries, and so after this we'll prepare a trial balance for all of these. So you've told me that you're comfortable with writing these journal entries, doing these calculations, and posting these transactions to the general ledger T accounts and calculating the balances. And I saw that in your homework you did a good job on that. I do want to caution you a bit that in this comprehensive problem, this trial balance is starting to get to be pretty hefty. It's starting to look like a nice full trial balance. So remember when it had 4 lines in it? Well, now it starts with cash. It's in the order of the accounting equation. So assets come first, liabilities come second, owner's equity comes third, revenues come fourth, and expenses come fifth. And so they're all listed here in their account names in order that they appear in the accounting equation. Now if they have a debit balance over in those T accounts, then the account is listed here in the T account. If they have a credit balance like this contra asset, then it's over here in the credit column. And we just go back to those T accounts, get these account balances, and post them all in here. Now look at all these liabilities. We haven't had quite that many credits before. And now we have a dividend for a debit, and then we have some revenues for credits, and now we have all these expenses for debits, and then a trial balance. These two have to equal one another. If they don't equal one another, you've got to go find your mistake. You must have posted something, written out a journal entry incorrectly, posted something incorrectly, calculated the balance incorrectly. Could be any number of things, but you have to go look for it. And then you make up these income statements. Now, that actually make up the whole set of financial statements. Last week, I worked with you on the income statements and showed you how those went together. I showed you the statement of change in stockholders' equity, and I showed you the balance sheet and how those went together. This week, I'm going to focus on the statement of cash flows. So here we have Pacilio Security Services, a statement of cash flow for the year ended, and now it's the end of 2019. So we're going to start here with making out this statement. Now I want to tell you that you have been working on this statement, or working perhaps around it, but I hope through it all semester. It started out in chapter 1, and you saw it on pages 21 to 23. And I'm going to encourage you to turn to pages 21 to 23 with me, and you'll see a set of financial statements. The statement of cash flow is down at the bottom, and you've been seeing this every week and how it was put together. So now we're actually going to type it and fill it in. On page 23, you should read about the statement of cash flow and these kinds of financing, investing, and operating activities. Excuse me. You should look at the General Exhibit 1.6 that shows the general way that a statement of cash flows comes together. And then you should look over on page 45, look at this horizontal analysis of transactions, and look at the statement of cash flows in the far right-hand column, given there in green, and the financing activities, the investing activities, and the operating activities, and see how those change, how we've learned to think these through initially before we ever start writing any journal entries, so that we're sure we understand what's happening and what's going on here. Now then, that's chapter 1, pages 21 to 25. Next we saw chapter 2, and in chapter 2 it's on pages 69 and 70. So I'm going to turn to pages 69 and 70 for you, with you, I hope, instead of for you. But now on page 69 again is a set of financial statements. Down at the bottom is the cash flow statement, and it shows you how the cash flow goes together. It shows you the way that these are presented. Then when you turn the page, the greater explanation on page 70 for the statement of cash flows, and a strong comparison here of why the income statement and the statement of operating cash flows are different. And it's important that you begin to embrace that difference here on page 70, that what we did in the income statement is on an accrual basis, and we're converting that to a cash basis. So now we will begin to see what happened to cash during this period of time. So chapter 2, page 69 and 70. And then chapter 4, we're going to turn to page 223, and I'm turning there right now. Of course, I've got too many things in my hands. So 223, and we have on page 223 a set of financial statements again, and we've got this cash flow statement. In this one, they're working with inventory, and so you've had these kind of calculations at the bottom of every one of these. And then on page 223, we see the statement of cash flow with the inventory calculation. And then at the bottom of page 223, they tell you that Financial Accounting Standards Board pronouncement 95 says that interest expense is shown as a non-operating item in an income statement because management chooses to use debt and pay interest rather than use their own cash and not pay interest. So in the income statement, we have to show it as a non-operating item. It's an election by management to use debt. And so that interest expense is not an operating expense. It's a financing expense. It's an option of the way you choose to finance your business. Now then, when you get to the cash flow statement, however, the cash that you pay out for the interest is shown as an operating item because that cash had to go through the working capital. So now at the top of page 224, they tell you that FASB 95 requires interest to be reported in the operating activities section of the statement of cash flow. There is no corresponding requirement for the treatment of interest in the income statement. So those two are shown differently in those two statements. You're required to change how it's presented. So it also then talks about the gain and loss on assets there on page 224 back in chapter 4. So I think that you should go back and read these. I want you to notice how the cash flow statement is analyzed in every one of the journal entries we've learned throughout the book. So it's always over here on page 227, for instance, on accounts receivable. It shows $7,425 of operating activities when accounts receivable are paid. So those are cash in from operating activities. And so you need to be able to recall these cash flow activities that you've worked with throughout the chapters. So every chapter there's this information about cash flows. Every single journal entry that you've been introduced to, there was an analysis of what happened to cash flow with that journal entry. So you have a reference there in the book for every single journal entry that we've learned. So now I'm going to show you how this goes together. So I'm going to pull this up, and here we have it. This should look much bigger for you. And we're going to start out, because this says cash flows from operating activities, followed by a colon. Pardon me very much. On the next line, we're going to indent, and we're going to have cash receipts from customers. Now, and there's a 1 that follows that. And now we have to come down here to the bottom, and we look at cash receipts from customers, and we begin to say, where do those come from? Where have we learned that those come from? And we list them here. So in these homework assignments, I've been leaving these in for you, so you could go back and look at all of the solutions for every comprehensive problem, and you could look at this statement and see how it went together for that chapter, for that topic, and then see which of these account transactions we continue to use. So collections from accounts receivable. So I'm going to tab across all the way to here. And I'm going to come out too, because this taxes is out quite a ways. It's going to be the start of an item, so I'm going to put in a $sign. And now I want to look for collections of accounts receivable. So I have to come back up here to the T accounts, and I have to find accounts receivable here in the liability, in the assets, and in entry 14 are these receipts from accounts receivable. So it's $136,100. So I'm going to come down here and I'm going to put in $136,100. And that's my receipts from my accounts receivable. Now the next one is my credit card, so I'm going to tab across to there. And I'm looking for my receipts from credit cards. So I'm going to come back up here to my T accounts. I'm looking for my assets. They're over on the far side, and here I have receipts from my credit cards. So here is where my credit cards were charged, and here's where my credit cards were received. And so this credit is $40,320. So I'm going to come back down here and put in my $40,320. And I'm going to actually bring that in one. And then I have to line it up like that to make sure that it's in proper perspective. So now that's the total, because the next one says total. And so I'm going to come up here to home, and I'm going to look for the underline with the bottom border. And now, oops. So it put a box around there for me, so I'm actually going to take that off. I don't want that. I was having trouble in class today with getting these underlines to work as well. So I'm going to come over here and use this underline under the U, and it'll put it in the size I want it. Now I have to add these together. So I'm going to tab across. Since this is a total, I'm going to do dollars, and if I added those together, I would get 176,420, and that's how many. That would be the amount. And so spacing gets to be quite a problem here. So I'm sorry that it's not coming out as smoothly, and I'm going to trust that you guys know how to get it in there better than I do at this point. So there's my total from customers. So I'm going to take this up here and put in a dollar sign, and I'm going to put in 176,420, and that will go in my receipts from customers. My next amount that I'm going to put, I'm going to indent, and I have to put cash payments for expenses. And that's going to be my number 2. And so I'm going to come down here, and I have my cash payment for expenses. So I have to go find these cash payments for expenses. Now I can see how far these taxes are going to take me out here. So when I put in this rent, I'm going to want to put it over there where I put the ones above. So I'm going to go look for payments of prepaid rent, and I'm going to come up here to my T accounts. Prepaid rents would be an asset, so I'm going to come over here and look for my prepaid rent, and I have this payment of $9,000. So I'm going to use that payment of $9,000. So
Are you still videoing?
I'm still videoing. 9,000, dollar sign because it's the first in the list, a comma, and a 1, 2, 3. So now I have my 9,000, and you can see that for some reason this thing is moving over, and I'm just going to let it while I'm working for you. Now, this payment for compensation is a much more complex calculation for you. So you need to take some notes and listen to what I'm going to be saying, and be writing these down, and then try to look for them. So if I were to look down here and look at compensation, then the first thing I'd have to do is calculate my compensation. And so if I looked at my compensation, I'm going to say that that would be, I'm going to indent here. it would be salaries, expense, and then it would be payroll tax expense, so I'm going to have to go look for these in the T accounts and see what they might be. So because I know that those are my compensation package, my compensation expenses. So I'm coming up here to the T accounts and I'm reviewing the T accounts, and I'm looking over here in the owner's equity, coming down into the expense section, and now I'm looking for salaries. So it's an S, so I'm going to come all the way to the bottom of the alphabet, and here's the salaries expense, and that's $65,000. When I look up at payroll tax expense, I see that that's $5,505. So I'm going to come down here and put in my salaries expense at $65,123, and I'm going to put in my salaries expense at 5,505, comma instead of a period. And then the other compensation that I have here are salaries payable, because I'm working now with cash. I'm working with the cash that went out in 2009, and those were earned in 2008, but the cash wasn't paid for until 2009. So the salaries payable represent the salaries from where the cash was paid out in 2009. So now I have to come back up here and look for salaries payable. And one place that I can do is I can go very quickly to the top of the comprehensive problem, and since that was a beginning balance, it's right here in this table. It's also the beginning balance in the T account, but this is $1,500. So I would put in $1,500, and again I'm going to try to keep these in some sort of order if I can, and if I can't, I'll just throw up my hands. There we go, that's pretty nice. And now then it says compensation and related taxes. So now I've got taxes that were withheld in 2018 and the cash was not deposited, or it might have been deposited, but I'd have to go and look. So now what I'm going to do is I'm going to come up here to my T accounts and I'm going to look through these payables, and I'm going to say what kind of transactions did I have for these payroll taxes that are payable. So I'm going to look here, and I have income tax, right? I'm going to just push this up a little bit so you can see it a little bit better. Here I have payroll tax payable, and I have a balance of $500. Here I have Social Security tax, and I have a balance of $600. Here I have Medicare tax, and I have a balance of $150. And then here I have unemployment tax, and I have a balance of $630. So I have all of those taxes where I have not paid the cash yet. So they need to be taken out of the cash from this time. So now I'm going to look here, and I'm going to put them in here. So I have, okay, I'm going to put in, let's see, I've got to remember these. It's tough to talk and hold words, and so I have income tax payable at 500 and Social Security at 600. So I think I can do 2 at a time. We'll see what happens. So here I have income tax and that one was 500. And then the next one was Social Security tax. And so that one's going to come back. I'm just typing this way. It's not the way it would normally be typed. You normally do it on a worksheet someplace, but I don't have any other place where you can see these. So I have to keep doing them this way. So this one is 600. Oops. And then I think one was Medicare. Medicare tax payable and unemployment tax. So Medicare is the 150 and unemployment tax is the 630. So I'm going to have Medicare. And unemployment. So I'm going to pull these guys, I'm going to pull these guys back just a bit so I can have them in a line where I can see them. And then for Medicare, I have, I might not get these exactly right, but I think this one was 150 and I think the unemployment was the 630. Now all of these are payable, so they were not sent out in cash. They weren't paid in cash, so they're all negative numbers. So I have to put brackets around all of them because no cash has gone out for these. They're being recorded up there in those expenses, but no cash has gone out for them yet. So these are all negative numbers. And so when I add these together, I have to add the positive numbers and the negative numbers. And so I'm going to give a signal that I'm doing math right here. And this number comes out to $70,125. So that's the number that I'm going to use back up here with these taxes. I'm going to type in $70,125 and pull that out enough. Well, it's being very temperamental. I'm using the undo because I can move it around. Well, anyway. It just does not want to move. It's probably... I'm going to get it over there. Go. Now I'm not going to touch it. Okay, so when I look at this payment of compensation, I can actually separate it a bit, but I thought you needed to see this computation, see where to go find these numbers and how they work together. It does not normally appear, but I think a worksheet helps a lot when there's one that's this complex. So we look at the compensation, the salaries, the taxes, and the payables from last time. Those were all compensation numbers. Those were all positive numbers that we had to pay for. And then these are the withholdings that we did not, for which we did not pay. Cash has not gone out yet, so it's a reduction of this compensation number in terms of cash. Okay. Now then, here we have the inventory, and if I actually went and it's saying payment of inventory. So I want to go up and look at the inventory. Remember, I'm looking for the payment of the inventory, so the inventory that went down. So here's supplies, prepaid rent, here's merchandise inventory, and so payment of inventory would have been this debit over here where we acquired some more inventory. So when we look there, we have 42.5, and we find that being paid for right here in entry number 4, 42.5. So we're going to put that in under our payment for inventory. $42,050, and see how I can do about moving this thing over. I hope it'll move nicely now. There we go, that's pretty good. Then the next one says payment of accounts payable. So now I'm going to go look at accounts payable. That's a liability. It's going to be in the center of these T accounts, the general journal T account. And remember, I'm not looking for the ending balance, so I don't want to use the T, I don't want to use the trial balance. I'm looking for the transactions, the payments of. So this one is a payment of accounts payable. So I'm looking for where an account payable was paid. So here we are with our accounts payable, and $425 was paid with this accounts payable. So here's where it was established, and here's where it was paid. So I'm going to go down here and put in $425 in this accounts payable. And then the next one says payment of advertising. So again, I have to go back to the T accounts because I'm only looking for the payment of the advertising, not anything else that might have happened in the T account. So advertising is an expense. It's over here in the equity section, which is on the right-hand side of this list of T accounts. It starts with an A, so I think it's going to be towards the top. And now I'm looking for advertising. So here we go, maintenance, depreciation, credit card, advertising, $15,000 for advertising. So I'm going to come down here and put in advertising. And then now I'm looking for the payment of the utility expense. So I'm going to go back up to those T accounts and look just for the payment of the utilities, not anything else. So here's the utilities, and it was $7,200. Happened to be simple for us on this one. So the payment is $7,200. And you just go back and forth until you get this done. And here's the 72,123, and then here's the payment of the warranty expense. Now here's where you'll see one. So here's the payment of the warranty expense. So when I go to the warranty expense, it's going to be an adjusting entry for me, and it's not a payment. There's no cash that went out here. In fact, it set up the liability warranties payable. So here's the warranties payable. There's that corresponding entry. But where I actually paid for the warranties was here in event 12, when I paid to have some warranty work done on products I had sold and had them fixed. So the warranty payment is this $1,950. And so I come back down here. Remember, I'm only looking for the cash expense here, not for the $1,950. And now payment of expenses for petty cash. Now petty cash, when I actually look at the T account for petty cash, nothing ever happens in petty cash. It's a constant. It just sits there looking the same way all the time. So then I have to think, well, then the only place I would know where that is in the journal entry for petty cash. And this time that is entry 8. So I'm going to come up here to these journal entries, and I'm looking for entry 8, and the payment is $95. It's right here. This is entry 8, this is petty cash, and I'm going to scroll this up just in case you can't see that credit is to $95 right there. So now I have to come back down and put the $95 in here. Whoops. And now I have to, I really should border this, and I don't think it's going to let me. It's only going to put a box around it. So I'm going to underline it with the underline function, but it's only underlining, a very small part. Now I have to add these together and get this total number. And so I'm going to come over here. I'm going to put in a $sign because it's the total. I'm going to put in 145,845, and that's the total amount of payments. And remember, all of these are payments, so these are all negatives. So I'm going to come up here, and this is going to be payments for expense, and I'm going to put in negative $145, 845, and off the brackets, indicating that that's a subtraction. So now I have those two subtraction. I have that subtraction. I have those two numbers. The third amount I'm going to put in here is payment for sales tax payable. So payment for, because it's not one of my expenses. I'm collecting this purely as an agent, in this case for the county and the state. And if it was employment withholding tax, I'd be acting as an agent of the federal government. So either way, I'm just acting as an agent. So payment for sales tax, tax payable. And now I need to go and look at the sales tax payable and see how much of that was actually paid. So here's the sales tax payable, and there was actually this debit over here, $3,480. That debit right there in event 10 is the amount of cash that was a payment. I'm not working with the balances, I'm working with the cash flows. So coming back down here, and I'm going to, in this schedule for the statement of cash flows, I'm going to put a bracket, wrong bracket, put a bracket and a $sign, and I'm going to put $3,480, the amount I just saw up there. And so I have these payments. Now then, this is the net cash flow from operating activities. And I need to sum these and put it in this far column. So I'm going to sum those, and I'm going to get $27,095, and that's the total cash flows from operating activities. Now, and those are supported by these two schedules down here. And if you would have this schedule for these compensation and related taxes someplace else, but you would have a schedule for that. So next we're going to have cash flows from investing activities. And we're going to look at those and see if there were any investments made. So are there any assets where we bought some fixed assets like land or property or equipment or any of those? We have a depreciation, but it was a van we already owned, so we didn't invest in that. We have equipment, but we didn't invest in that. It had a balance that came forward. We had machinery, we had merchandise inventory, but we've already recorded that. That's not a long-term account. That's a current asset. So we have no investing activities. We didn't invest any. We invested all of our money in operations and not in investing activities. So now we're going to come down and we're going to look at cash flows from financing activities. Excuse me. And that's going to be a colon. And now we're going to come down here and I'm going to indent just like I did up above. And I'm going to have cash inflow from a loan. And I'm going to look up here and say, well, in these financing activities, here are my payables, and here's a note payable, and here's $12,000. So I'm going to come down here and put down $12,000 inflow from cash activities, and that's going to be 12,123. And then I'm going to have cash, I'm going to indent, cash payments for dividends. And so now I'm going to go up here and find the dividends in the T accounts up here under these financing dividend, under this owner's equity. There it is, $10,000, event 19. So I'm going to come down here and put this in my cash flow statement, and it's going to be 10,000. And so this, these are going to be my total. These are my net cash flows. Now these are net because this one is a minus sign. The 10,000 is a minus. And these were pluses and minuses, so it's the net of the pluses and minuses. Cash flows from financing activities. And that's going to come over here, and that's going to be $2,000. Now the next one is then the next total I'm going to get is going to be my net increase or decrease in cash. So it's presented this way: net increase in cash. If it's got a bracket around it, it's a decrease, and in this case it is 29,095. It's the sum of those two. And then I'm going to get my beginning my beginning cash balance, but I'm going to put plus in front of it so we know that we're adding it. And you always put plus in front of it, because unless it was a negative cash balance at the end of last year, but that doesn't happen very often. And now then we can look at the general ledger T account and see how much it was. So we can go up there and look. But again, we can look here at the beginning trial balance and find the amount of cash that was in the account in the beginning. And it is oops, excuse me, I'm about to drop my book, sorry. It is 93,380, and I can go up here and confirm that by looking at this T account, and there it is. There's that beginning balance, 93,380. So I have that correct, both from the beginning trial balance and from the T account. And so now the total of these two is going to be my ending cash balance. And the ending cash balance here is going to be dollars, $122,475. And that's how you prepare a statement of cash flows. You're looking for activities from three sources: operating activities, financing activities, and investing activities. I'm looking to see here, I am at this time changing the font so that these, I can't be helped. I'm changing the font so that these can be, will look the same, and then I can drop this font to something quite small. I'm going to just put in a 5, and that gets very small. You can hardly see it, so it could be bigger. I'll make this one an 8 and see what it looks like at 8. But anyway, it just needs to be small enough so it corresponds with these. So this is our first in-depth work with the statement of cash flows. We'll do this again next week. You'll have to do this on your own, but I wanted to demonstrate to you one time at least the detail behind this, so you could see someone do it rather than have to search it out all by yourself. Well, that brings me to the end of chapter 9, and I thank you for listening to this presentation, for staying with me this long, and I'm trusting that it was helpful. I guess if it wasn't helpful, you would have shut it off by now. So that's the end of the presentations for chapter 9. And you have a good week, and remember, your job this week for the comprehensive problems is all the financial statements. So the only one I've demonstrated is the cash flow statement, because I did not demonstrate it last week. All right, goodbye. See you around campus, and have a good week.